What's going on, guys? Justin Conroy here, and welcome to another video. Thanks for being here. In this video, I'm going to dispel the misconception that you can somehow take a raise at work, get yourself into a higher tax bracket, and then take home less money at the end of the day. This notion is absolutely incorrect, and I'm going to show you why. If this is your first time here and you want to learn tips, tricks, and hacks related to personal finance, how to build wealth, and how to better manage your money, don't forget to subscribe and hit the notification bell so that you don't miss a thing. So about 10 years ago, when I had my first engineering internship at a manufacturing company here in Texas, I made friends with some of the maintenance team. One day, Joe comes up to me and says,
"Man, Justin, you won't believe what just happened to me."
"Well, good news, I hope."
"Nah, these guys must think I'm stupid or something. My good-for-nothing boss just pulled me in and tried to give me a raise. What an idiot."
"Well, Joe, isn't that a good thing? I mean, you must be doing a good job. They're trying to give you more money."
"Well, I am doing a good job, but I'm at the edge of my tax bracket and they know it. If they give me a raise, I'll end up taking less home at the end of the day."
It was then that I realized that Joe had no idea how income tax brackets worked. And let's be honest, I get the confusion. The IRS can take something as simple as calculating how much money you should pay them and turn it into an overcomplicated mess. So let me break this down into very simple terms. Joe thought that the income tax brackets worked like this. Let's assume, for sake of simple example, that Joe makes $150 per year and that there are 3 tax brackets. From $0 to $50, you pay 10% income tax. From $51 to $100, you pay 20% income tax. And from $101 to $150, you pay 30% income tax. Joe thought that this meant that his entire salary, $150, would be taxed at 30%. So, 150 times 30% equals $45. That means the IRS gets $45 and Joe takes home $105. Luckily, this is completely not the way the IRS does things, because if they did, you would end up paying a lot more in taxes. Let's do that again, properly, as the IRS does it. Instead of being charged 30% on the whole amount, you have to look at each individual dollar and where it falls in the bracket. So for Joe's first $50, he would pay 10%, meaning 50 times 10% equals $5 to the IRS. Joe keeps 45 of the 50. Then, Joe makes another $50 from his job. In total, he has now made $100 gross income, but he has already paid taxes on the first $50, so we don't need to pay those again. We just need to pay taxes on the second $50 we made. At 20%, this comes out to $10 to the IRS. Joe keeps $40 of the second $50 he makes. Finally, he makes another $50 from his job. In total, Joe has now made $150 in gross income, but he's already paid taxes on the first 50 and the second 50 that he made. So like before, we don't need to pay taxes on that money again, only the last $50. So at 30%, that comes out to $15 to the IRS, and Joe keeps $35 from his batch. So all in total, Joe pays $30 to the IRS, and he keeps $120. Now let's expand on this a little bit more. What I've got over here are the 2019 tax brackets for a single person filing. And what this tells us is that we're going to pay 10% tax rate on the first $9,700 that we make. After that, up until $39,475, we'll pay 12% on that money, but not on that first $9,700 because we've already paid those taxes. On the next dollars we make up until $84,200, we'll pay 22% on that money, but not the money below $39,475, and so on and so forth. Let's see how that works in a real-world example. I'm going to type in a salary here. Let's say you're an average American and you're making $48,000. Now you saw some stuff change over here. Let's explain. The middle section here is the wrong way to calculate your taxes. This is the way Joe was calculating his taxes. He took the $48,000 salary that he's going to make, and he multiplied that by the tax rate in that tax bracket, which is 22% in this case, and he gets $10,560. That is way too much money to be paying in taxes, and that's actually not how it works. you can see over here in the right way that we pay the full first bracket, which is $970. It's 10% of that value right there. Actually, it's this value minus 0, which is still that value. Then we pay the full bracket 2 taxes, which is $39,475 minus $9,700 times 12%. Okay, and that gives us our $3,573. And because we've already paid the taxes on all the first $39,475, we then take our salary number, $48,000, and we subtract $39,475 because we've already paid taxes on that money. And then we have a remainder, and we take that remainder and we multiply it by 22%. That gets us the remainder of tax bracket number 3. We sum those numbers up and we get $6,400, okay? Which is less than $10,000. So again, this is the wrong way. Bulk income times tax rate. This is the right way. Brackets, okay? This is the important part. You get taxed on every dollar you make, not your bulk salary, okay? Just for sake of example, if you make more than $48,000, let's say you make, let's get ourselves into that next tax bracket. Let's say you make $95,000. Nice salary. You can see that bracket 4 pops up here and we now owe $16,975 versus the wrong way, which is over $20,000. If you make even more money, let's say you make $250,000, you're not paying nearly $90,000, you're paying around $63,000. If you make less, $25,000 for example, it's getting closer to the same, but we're also getting closer to those smaller tax brackets. So hopefully this makes sense. I will put a link to this calculator down in the description below, and let's go ahead and move on. Now don't forget that we are just barely touching the tip of the iceberg when it comes to income tax and all the things that could go with it. We could start talking about things like Social Security, Medicaid, standard deductions, itemized deductions. There's a laundry list of things. The only thing we're looking at is the raw income tax on your gross income. There's a lot more to this. Please be sure to consult with a tax professional before making any decisions about your life. So hopefully all that made sense. And please, if you have recently turned down a raise because you thought you were going to be in a higher tax bracket and take home less money at the end of the day, please just go to your boss and tell him you changed your mind and you'd love to take that raise. It really is to the benefit of yourself and your wallet for that matter. And if for some reason you still don't believe me and you still think that this is a bad decision, do yourself a favor and please go do some research, check out the IRS tax tables, and figure out on your own how these things actually work. This is something that is really hurting a lot of people in this country, and you know you can take home more money and get taxed the appropriate amount. It's all right. It's good. Please just go do it. With that, if you have any questions or comments about this topic, or if you have future ideas for videos, please let me know down below. Don't forget to like and subscribe and hit the notification bell on your way out. Don't forget to follow me on Facebook and Instagram. And as always, thank you for your time and support. Have a good one.